All right, folks, here we are on Trading Nut YouTube. We've got Anthony Navarro on the show. We've just done a fantastic podcast. You've got to go and check it out. Links underneath the video here. Anthony's about to walk us through the way that he would approach backtesting a system. So you're going to find out a little system. You're going to find out how he backtested his system over 900 trades to get it to become a profitable system. So, Anthony, welcome back to the show.
Great to be back.
Well, let's jump into your chart and have a look at you walking us through the stuff.
Sounds great.
Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
So the first thing you need to do to backtest a trading plan is to, number one, have a trading plan. And in my spreadsheet that I have here, I actually have a sample trade plan that we're going to take a look at. And it's very simple. I'm not recommending this as a trade plan for anyone to follow. A lot of trade plans have many steps. You're looking at trend, you're looking at RSI, you're looking at all sorts of variables. So just for the purpose of this exercise, I just invented out of thin air a wick over wick system, where what we're looking for is adjacent candles that open and close at the same place, or in this case, close and then open at the same place without a gap. And they have fairly symmetrical wicks on them. So if you see right here, we have a vertical wick and going up on that first candle and going down on the second candle, and they're about the same size. All right, so this is the sample trading plan with just 4 simple steps. Step 1 is look for this formation. Look for 2 adjacent candles in a congruent direction that have a wick between them that are about the same size, and identify that as a supply zone or a demand zone, a tradable area, as I drawn out in this yellow box. Step 2 is locate this trade in the trend. For instance, this would be a long trend, so a long trade. So are we in an uptrend? You know, the trend is your friend until the bend in the end, as they say. Likewise, if these were 2 red candles with a wick over wick, we would be looking to short it, and we want to also be in a downtrend while we're shorting. Okay, so that's step number 2. Otherwise, we pass on the trade. Step number 3, that's also right there. Step 3 is make sure we're in the direction of the trend. Step 4 is then map out a trade with a 3-to-1 target. So if this wick over wick area is, say, 10 ticks wide, then your target should be 30 ticks wide. And just set and forget. Don't even worry about setting a target, or if you want to set a target, go ahead and look for the adjacent or opposing level of supply or demand in your plan. All right, so I'm sure your trading plan has many, many steps. My plan actually has probably about 17 steps for every trade that I go through to look for it. But this is just for the purpose of example, just to make it very simple for you to see. All right, so now we're going to go to TradingView, and we're going to backtest copper. All right, so I'm going to do Alt-G, or you can use the Go To button down here in the corner. And let's just go to the 1st of June. Let's just test copper for 30 days on the 15-minute time frame. All right, so we're going to go to June 1st, and what we see, and I just mapped out a couple of example trades, actually all of the trades in here, that we have a wick over wick. We have 2 adjacent candles with a wick down and a wick up, but when we look at the crosshairs on the left-hand side, we're actually in a sideways trend. All right, so we're going to pass on that. We have a wick over here, and we're still in this sideways trend going on. We have a wick over here, and lo and behold, it looks like we're still in that sideways trend. So we're just going to tootle along and look for the next available thing. Aha! We have a wick over wick, but this time I'm going to include Doji candles that include a wick over wick, or at least a candle that has a little tiny body and is like 90% wick. Because if you read my article on TradingView on testing or backtesting a system, I did not include Doji candles. I just looked for 2 adjacent candles. So this is one of the iterative processes of backtesting, is you think of new scenarios, you think of new ways to make your system better, to be more inclusive of more opportunities. And that's exactly how I took my Sabre system to finding directional trades. And then I had a counter trading system, counter trend trading system. And now I can actually find trades in the sideways markets as well, which we call the gauntlet.
Hey, want to trade crypto and gold like the institutions? Well, you can. And it's free for 14 days with Sage Strategies, fully automated trading strategies. Check out their live track records for 25 unique strategies. Plus, they host everything for you, which is perfect for beginners to advanced traders or investors. Simply sign up for their 14-day free trial today to experience it for yourself.
So as you test your system, you're going to find, hopefully, new ways or new ideas. What if I did this? What if I did this? So for the purpose of this example, if you looked at my article before, I think I tested the euro or the S&P. So we're testing copper, and I added this variable here based on my last experience. So we're going to include dojis as wick over wick because, lo and behold, that's what it is. All right. So here's this wick over wick, and where we are is in a bit of a downtrend. So here we have a downtrend and a wick over wick. Boom. We're going to place that trade. All right. And so price comes into play. It enters that trade, and lo and behold, boom, we have a winning trade. So we would then log that in our spreadsheet and say, okay, there was our trade. And I actually am logging because if I'm going to test a new variable that I've never tested before, I want to see how successful or unsuccessful this new variable is. And in this case, we have our winning trade. So now we continue along in the system. And we found ourselves here with a wick over wick pattern with red, 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 wick over wick. And when we look at the crosshairs here, yeah, it looks like we're in a downtrend. So let's go ahead and place a short trade. And 1, 2, 3 candles later, that trade would have entered. And because we were planning a target here, the bottom of that original move, we didn't get 3R, we got 4.85R. All right, so you would go ahead and map that in your spreadsheet. Date and time. In this case, it was not a doji type of situation. It was 2 separate candles. And we map out our 4.85 profit. And we go along, and right after that trade, we had another wick over wick. We have a red candle and a green candle. Now, before, I hadn't really looked at different colored candles. I looked at all the same candles. So this might be a situation where you say, I wonder if I can test this scenario. So I'm going to go to my spreadsheet and say, maybe I should mono color candles. So I want to know, do I have more winning trades when they're monocolored or when it doesn't really matter if they're the same color or not? So in this case, we see we had a losing trade. All right, so we had a losing trade, and that was the 6-3 on 12.15. 6-3 on 12.15. So no, they were not all the same color. All right, yes and yes. All right, so again, we're taking our existing system that we trade and we think, I wonder if, and we're finding better and better ways to become more and more targeted to make our system more and more successful. All right, so that was a losing trade. All right, and in this case also, I didn't take that as a losing trade. I saw this as a trade that was starting to go sideways. So that's one of the things you can look at too. How would you treat this trade? If you were in this trade for all this time, what would you do? And you say, well, yes, it wasn't a downtrend, but now it looks like it's coming up. And rather than take a loss, just get out of here. Grab a half an hour profit. All right, so we keep on going. And we have a doji trade, a doji wick over wick. That doji is right in the middle of all those, that wick area. The trade enters, and we are in what appeared to be an uptrend at that point, a minor uptrend. And that trade ended up getting ticked out. All right, so we go back to our spreadsheet, log that sucker. We had a -1, and yes, it was a monocolored candle because it was a doji. And we go along. We find ourselves another wick over wick situation. And you notice that these are not exactly the same size, but they're similar. So that might be something where you can say tick ratio, where you can say, you can look at wick number 2. I actually had this over here. Wick 1 ticks, wick 2 ticks, and your tick ratio you can say is equal this divided by that. So you can say this one was 15 ticks and this one was 8 ticks, and you realize, man, that's a little bit off. So you can say, at what ratio should I not take this trade? Do the wicks have to be 80%? Do the wicks have to be 30%? Identical. So again, we're refining as you're backtesting your system. You're coming up with more and more situations. All right. So rather than go through every single one of these trades, what I'll just say is I logged right here 17 trades. All right, all matching that wick over wick pattern. We had ourselves a 5.7 R win. We had ourselves a 2.4, that ended up being a -1 loss. We had a wick over wick right there, in an uptrend. So here we have the uptrend and so on. And there we had a 3.6 win. So we had a wick over wick right there in the context of a downtrend. So you get the idea. So without having to walk through every single one of these trades, what I logged is all these doji candles. And then later, maybe I should log these multicolor candles. Oh, maybe I should actually look at the actual ratio and then the eventual win rate. So when you start looking at the summary, you can say, well, we had 17 trades with a win rate of 12. We had a total win rate of 71%. Wow, that's not bad. And this is crazy because I just took this out of my head. This wasn't actually a real scenario that I was looking at. But you can actually even say, by what hour of the day did I take this? So out of the 17 trades, if I trade between 6 in the morning and 11 in the morning Eastern time, I would have only got 4 of those trades. And of course, all we tested here was copper. If you go ahead and do 30 different futures contracts, you might get 30 times 4. You might get yourself 120 trades just on this one scenario. So you might be trading multiple scenarios. You might have a breakout trade scenario, a trending trade scenario, a news-based scenario. And the whole point is to see under what criteria is my system working, and you create all those different criteria here and you test it.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com or there is a link in the description.
So when I added a doji with the body of the candle in the middle, and the wick over wick is really just the wicks on that one doji candle, I tested that. So we can say, okay, let's go and look at the summary. And let's say, okay, out of all the trades, we had 4 of them be doji trades, which meant out of the 17 trades that a quarter of them, 24% were dojis. So before, I was leaving money on the table because look at this, the doji win rate is 75%. All right. So what we can find is as you test your trading system, as you go through several hundred and literally every iteration of trading that I did or backtesting that I did to test my Sabre trading system, I came up with more and more refinements, more and more ideas to look at different scenarios, to expand my trading system to not just be trend-based, but also be non-trending and also be counter-trending. And so it was amazing. The more you test, the more you see. And that is the absolute power of a trade plan, that you can put step-by-step rules and not think about it or not have any subjective judgment. Because when you're in the hot seat and you wonder, should I take this trade or not? You can't test that. You can't test emotion, but you can test fact. And the thing I liked about this, as I said earlier, if you can see the system works, the question is, can you work the system? And that gets into psychology. But this is how you would backtest a trading system. Find a way to make a mechanical rules-based scenario to step-by-step set up your trades, and then you can go back in time in your trading platform, in this case, TradingView, and be able to test every single scenario that you possibly can. So I hope that gave a really easy little bit of a primer 101 on how to backtest.
All right, guys, so there we have it. Anthony, thank you very much for showing us that. That was awesome. What's the best way for the guys to get hold of you?
Anyone can get a hold of me at my main website at sabertradingsystems.com. You can also reach me on Trading View with the handle of OCaptain, like O Captain, my captain. And email is anthony@sabertradingsystems.com, and that's SABRE.
Cool. Awesome. Well, look, guys, do remember we did shoot that podcast as well. Link below the video, or you'll find it here on YouTube. And if you do want to see more videos like this in the future, hit subscribe, hit like, click on that little bell, and click all to get notified when future videos like this go live. See you in the next one.